We're here with the mind behind capital wealth planning, Kevin Simpson, talking about stability in tumultuous times. And isn't that news you can use? Thanks for inviting us into your home, sir. Tell us how we can ride this roller coaster without losing our shirts.
Well, it's about change and uncertainty, isn't it, Lou? What passes for wisdom on Wall Street these days is that markets hate change and uncertainty. Wow, that's deep. But guess what? The one thing we can be certain of is that change is a constant.
Change is a constant.
You should expect change and not be surprised by it.
Okay, so expect change, anticipate the unexpected, sounds good, seems counterintuitive.
I'll agree, it does sound a little bit counterintuitive, but we break it down very simply with a strategy we call the 3 R's: rules, risk, returns. At Capital Wealth Planning, we think if we follow our rules, we follow our process, we control risk, we mitigate the downside, that the upside and the returns will take care of themselves. We've seen a global pandemic, a massive stock market correction, a forced recession, historically high unemployment, the worst GDP print in history. And every single thing we do, the process is the same, regardless of those circumstances. We go through the same process, we go through the same thoughts, and we go through the same execution. In our rules, nothing matters, whether markets are up, down, or sideways.
Explain that to me.
It starts with how we invest. We buy great companies with strong balance sheets, great earnings, terrific free cash flow, solid dividends. The rules apply to how we allocate, how we divide among sectors, how we build portfolios. It also comes down to how we sell stocks, whether they're outperforming or underperforming. And it also comes down to how we write covered calls. Nothing is on autopilot.
Nothing?
Nothing. We don't market time, we don't sector weight, we don't over-allocate to any one position, no matter how strong our conviction might be in any one stock. Everything we do is based on clear-eyed, calculated decision. As for risk, mitigating the risk and protecting the downside, I mean, that really is the foundation of what we do at Capital Wealth Planning. We think if you can protect the downside, if you can get through volatile times, if you can manage money in flat and down and volatile markets, that ultimately the upside will always take care of itself, which naturally leads us to returns. And we feel that our returns have been very consistent within that philosophy. If markets are up, we want to participate in as much of the upside as possible. But far more importantly, if markets are down or flat, if we can modestly protect that downside, if we can reduce our downside capture and maximize our income, then we can allow our investors, our clients, to generate cash flow to help us to get paid while we wait. Now, our performance has been terrific and the numbers speak for themselves, but it's so important to think about what we're going to be doing in the future, even more so than the great work we've done in the past. So at Capital Wealth Planning, it's about the 3 R's: rules, risk, returns.